hear the opening bell at 9:30. You have been here since 6. You are already behind on 3 reports. You are 24 years old. You have $68,000 in salary and $91,000 in student debt. You watch numbers. That is the job. Most people on this floor watch the same numbers and see the same things. You watch them longer. You watch them after everyone else has gone home. You see something different. You stay until 8. The floor empties out by 6. Sometimes, by 9, only you and the janitor are left. Volume spikes in small cap stocks, 3 separate tickers, 3 separate sessions, all of them before news that move the price. The probability of 3 coincidences is not something you calculate. You just know it isn't 3 coincidences. You don't tell anyone, you don't write it up in a report. You sit with it. You know someone new, someone always knows before the crowd. They left tracks in the volume. You found them. Tracks in the volume, tracks in the timing, tracks in the options chain 3 days before the catalyst. You learn later that his name is Karas, 11 years on this floor. He never stays late. Tonight he does. Tonight he does. He stops beside your desk at 7:48. He doesn't say anything at first. You look up. He is already looking at what you were looking at. You show him the pattern. You don't explain your conclusion. You just point. He looks at it for 40 seconds without speaking. You watch him. You don't say anything either. You take the card, just a phone number. No name, no company, no explanation. You look at it for a long time. He says, "Call it if you ever want to understand what you are actually seeing." Then he walks away. You go home. You think about it for 3 days. You run the pattern analysis 14 more times. You know what you found. The market opens. The market closes. The pattern holds every time you look. On the 4th day, you call the number. Your hand is completely steady when you dial. He picks up on the first ring. You were ready for voicemail. You weren't ready for this. You listen. He says there is something you need to see in person. Bring your analysis. Only what fits in your head. You meet him that evening. A bar he chose. A corner booth with no sightline from the door. He talks for 30 minutes. You ask 5 questions. He answers 3 of them completely. You hear him describe it as research coordination, a group sharing market intelligence before positions move. He is very calm about it. You understand exactly what he is describing before he finishes the second sentence. You don't say that. He asks if you are interested. You don't answer immediately. You make him wait exactly long enough. The second rule, information is only valuable before the price moves. After the move, it is just noise. Karas sends you 12 names, small cap stocks, thin float, low institutional ownership, high retail participation. You already know 3 of them. You've been watching 2 for 6 weeks. You don't tell him that yet. There are 4 people in the room. Nobody shakes hands at the start. Nobody uses last names. They call it a research syndicate. The language is precise. It isn't chosen by accident. You read it. The document looks like a standard equity research note. Column headers, target prices, a catalyst timeline. At the bottom, there is one line that no legitimate research note has ever contained. Your job is the timing model. Entry, accumulation, escalation, and exit. All mapped before the catalyst arrives. The catalyst will be manufactured, a newsletter, a coordinated wave of forum posts. You understand that now. You run the model anyway. Somewhere, retail investors will see the newsletter. They'll think they found something. They didn't find it. It was placed for them. You knew it would be Tuesday 3 weeks ago. The newsletter publishes on Tuesday. Right on schedule. Your schedule. The price moves exactly the pace the model predicted. Day 3 is the acceleration. Day 5 is the peak. You knew it would happen. Knowing and watching it happen are different experiences. You file that away. $41,280 arrives in an account you opened 6 weeks ago. You sit with it for a long time. You try to find the feeling you expected. It isn't there yet. You don't sleep well. You run the decision tree in your head until 4 in the morning. The next morning, you are at your regular desk at 7:45. You look exactly the same as always. Nothing has changed on this floor. That is the point. Nothing here can ever change. Karas walks past your desk without stopping. You give him nothing. He gives you nothing. That is the protocol. Behavior is the only thing visible. You control your behavior with more care than you model your positions. The second cycle begins 4 weeks later. You don't wait to be invited. You submit your target selection first. You've identified a second pattern, a third. Your model is now running 8 tickers simultaneously. Nobody asked you to build it that way. The group meets again 6 weeks later. The dynamic has shifted. They're asking your questions now. You listen while Vera speaks. She wants to scale the model. More stocks, faster windows, concurrent cycles. She looks at you the whole time. You say you can run 5 concurrent targets. You say it without hesitating. You've already built the framework. You wait. Karas nods once. In this room, that constitutes an enthusiastic endorsement. You nod back. You spend 8 weeks building the scaling model. You don't tell anyone how sophisticated it becomes. It maps float rotation, timing windows, accumulation velocity, and exit thresholds across 5 parallel positions. The model is the machine inside the machine. It runs cleanly. It runs without sentiment. 2 more cycles. Your cut, $94,000 in 3 months, on top of your salary. Your suit is better now. Your tailor doesn't ask questions. Nobody does. You eat at restaurants that cost $200 before the wine. You go alone. You prefer it that way. The messages arrive through an encrypted application. Ticker, float, window. Entry, you memorize them and delete immediately. The whole communication takes 9 seconds. Less than the time to read a text from a friend. You don't reply to personal messages during dinner. You've noticed you have fewer personal messages than you used to. By month 7, the group is running 5 stocks at once. 3 in accumulation, 1 at peak, 1 in distribution. The staggering was your design. You built it so the volume patterns wouldn't align, so there would be nothing to see. You understand the regulatory detection algorithms better than most regulators. That is not accidental. You research them specifically. You hear Karas tell the group that you built something they couldn't have built without you. He doesn't look at you. You don't need him to. You don't react, not because you've been trained to suppress it, because you genuinely don't need the acknowledgement anymore. You are 25 years old. You have never felt this precise. And precision is starting to feel like the only thing that matters. The operation moves to a private office, registered to a consulting firm. No brokerage affiliation, no shared space. There are 7 people now. You know 4 of them well. The other 3 you know only by function. You don't know everyone's full name. You don't need to. In this structure, what someone does matters. What they're called does not. You have access to 4 separate brokerage structures. None of them in your legal name. 3 of them not in any name you recognize. You didn't build the scaffolding yourself. That took 3 months, and people who do only this. You understand every layer of it now. Vera runs the compliance layer. She is the one who makes it legal on its face. That phrase is hers, not yours. The structure exists to make the trail longer than any single investigation can follow. You understand that clearly. You listen to every word. You ask her to repeat the second layer once. Not because you missed it, because you want it exactly right. The structure is entirely legal. It is one of the most elegant things you have ever seen. What the entities do inside the structure is a different question. Nobody in the structure uses that framing. You understand what the structure is for. You understood it the moment Vera finished the second sentence. You stop questioning it around month 9. Not because you've resolved the question, because you've chosen the answer. The third rule, the system doesn't care why you participate. Only that you do, and you do. A new name arrives. Fenwick Minerals. 23 million shares. Float so thin, you could move it yourself. You build the accumulation model in under 40 minutes. You've run this construction so many times it feels like arithmetic. You know exactly which day the price will move. You know the session, you know the approximate magnitude. You know because you decide that shift happened somewhere in month 7. You noticed it and kept working. Fenwick Minerals moves 41% in 4 days. Volume 400% above its 2-year average. Right on schedule. You feel nothing. You log that as data. The absence of feeling is the feeling now. Your cut from Fenwick, $214,000 in a single cycle, in 17 trading days. Karas takes you to dinner, a proper dinner at a place that requires a phone call, weeks in advance. You listen while he lays it out, mid-cap, more volume, broader reach. He says it like it is simply the next step. For you both, it is. Mid-cap means more counterparties, more exposure, more coordination required, and more people who could talk to someone they shouldn't. You know what this step means? You take it anyway. You've already decided before you sit down for dinner. You shake his hand. The wine glasses are still full. Neither of you has touched them yet. You walk home. You don't call anyone. You haven't called anyone without a clear operational purpose in 4 months. You know that people bought Fenwick Minerals, retail traders with brokerage accounts. You know how much they paid and when. You know what happened to their positions after the group sold. You built the exit cascade. You modeled the collapse. You know all of this. You know all of this. You have known it since the first cycle. You don't call anyone about it. The fifth rule, at a certain scale, the operation becomes self-concealing. Size creates its own cover. 11 entities, 6 jurisdictions, 3 continents. The structure is real. Every entity is legally registered and properly maintained. Nobody announces the change. You simply sit at the head of the table one day and nobody moves to a different chair. It happened the way these things always happen, not through a decision, through an accumulation of facts. You present 12 targets, priority order, timing windows, estimated cycle revenue, risk classification. Nobody argues with a single entry. This is what authority looks like in a room with no titles. Nobody argues. The model is right. They know the model is right. You are 27 years old, 2 years and 4 months without a single interruption. You don't mark the anniversary. Your office is on the 31st floor. The view faces east. You see the market open every morning from this chair. Total notional value moved across all accounts since inception. $1.4 billion. You don't track your personal cut directly anymore. A separate person manages that. You ask for quarterly summaries only. The machine runs in 3 parallel streams now. Accumulation, peak, and distribution, always active simultaneously. It never stops moving. 3 targets at different phases. They overlap deliberately. When one exits, the next enters. There is no gap. Accumulation overlaps distribution. Distribution overlaps the next accumulation. The operation has become its own perpetual motion. The machine never stops. You are not sure anymore whether you are running it or it is running through you. You are not manipulating the market anymore. That framing doesn't fit what this has become. You are in the market. The market is running through you. That is not the same thing. New contacts arrive. They represent a dark pool operation on the European side. They were referred by someone you trust. Barely. You let him explain. He describes what dark pool access means for your accumulation scale. He explains it correctly. You already knew. You understand the proposal completely by the time he is halfway through the first paragraph. You tell him you'll need the full counterparty structure before you can say anything. You'll need it in 48 hours. You see him recalibrate. He wasn't expecting that question. Most people don't ask for the counterparty structure. You are not most people. You walk out, you let them wait 4 days. They send a follow-up on day 2. You don't respond until day 5. On day 5, you say yes. You attach 17 conditions to the agreement. They accept 14 of them. The network now spans 3 continents, 19 counterparty nodes, 4 dark pool access points. The architecture you built is complete. You know things about the behavior of mid-cap equity prices that no regulator's model has correctly mapped yet. You know because you built the gaps? Every gap in the detection architecture was an architectural decision. You made them. The social world narrows automatically. You don't miss what you don't have time to notice is gone. You stop attending most events, not because you are too busy, because the conversations aren't useful. They haven't been useful in a long time. You have 3 contacts you trust entirely, Karis, Vera, one other whose name you won't write anywhere. Everyone else in the network is a node, a function, not a person you carry in your head when you aren't working. You know that most of the retail traders who bought your last mid-cap target lost between 30 and 60% of their position value. Their average loss was $14,000 per account. You calculated it. It was part of the exit modeling. You know all of this. You have known it for a while now. You find the next target file and open it anyway. You have known it for a while now. You dial the number anyway. You open the next file anyway. That is what the machine does. You fly 4 times a month now. Different cities, same conversations. The rooms are always dark wood and quiet light. You review target files at 37,000 feet. You are most efficient in the air. No one can interrupt you there. The conversations are identical in every time zone. Entry window, float, distribution target, counterparty allocation. The language is the same everywhere. You can evaluate a counterparty's reliability before the meeting reaches its midpoint. You've been doing this long enough to read the room. The network moves 1,200 million in notional through 3 markets in a single quarter. You run the coordination from this chair. You are 29 years old. The gray at your temples arrived sometime in month 31. You didn't notice until Vera mentioned it. Total notional through the full network, $2.7 billion, across 31 months of continuous operation. You are not the largest. You are the most coordinated. That distinction is worth more than scale. The SEC publishes a coordinated trading bulletin, enhanced monitoring of unusual volume patterns in mid-cap equities. Effective next quarter. You read it twice. You circle nothing. You don't send it to anyone in the network. You knew this was coming? You knew this was coming? You've had a contingency protocol built for 22 months. This is not a surprise. This is a clock. The seventh rule: the moment you start thinking about the exit is the moment you are already late. You started thinking about it on day one. Vera sends 2 words. The message deletes itself after 7 seconds. You read it in 4. You sit with it for 40 seconds. Exactly. You count, then you begin the protocol. The protocol is not improvised. You built it 8 months ago on a Sunday when the office was empty. You walk Karis and Vera through it. You have it memorized. You speak quietly and without drama. You told them sequence matters more than speed. You speed, you signal, you sequence correctly. You are invisible. You built in 6 weeks. That is the full dissolution window. Your sequence, your protocol. Not 1 day faster than necessary. Normal trading behavior across all accounts throughout the 6 weeks. No rushed exits. No position liquidations. Nothing that looks like anything. You've run the behavioral pattern analysis on your own network. You know exactly what panic selling looks like from the outside. You will not do it. Week 1, completely ordinary behavior. You arrive at the same time. You leave at the same time. You eat at the same places. You return to the visible desk full-time, standard research, standard client calls, standard everything. Your colleagues notice you seem more relaxed. You write 3 equity research notes in week 1. They're among the best work you've produced here. You mean that? Nobody on this floor knows what is happening on 31 floors above their heads. Nobody on this floor has any reason to ask. You know, the SEC will move. They open formal inquiries with 3 broker-dealers in week 2. You knew the broker-dealers would be first. You read the alert at 11:43. 3 minutes before the wire publishes it, Vera sent you first. You finish the research note you were writing. You send it before noon. It is on the right companies. It says the right things. You eat lunch with a colleague who saw the wire story. You discuss it like someone who has no stake in it. That is exactly what you are on paper. In week 4, the network begins to fracture. 2 nodes go silent. One sends a message you don't open. You open the encrypted application. Panic from multiple senders. You read 3 messages. You close the app. You won't read the rest. Panic is information. You don't respond. Every response you send is a record. You will not create records. Your attorney is from a firm that handles complex corporate matters. You hired him 10 months ago. You've met him 4 times. The paper trail he sees tells a very ordinary story. That is precisely why you built the structure the way you did. The design is working. Every entity in the wind-down sequence is closing on schedule. Quietly, legally, invisibly. You read their names on a legal wire in week 5. 2 members cooperating with investigators. You feel nothing useful. You keep working. Neither of them has anything useful to offer. You made sure of that when you designed the counterparty access structure. They know their function, not yours. You scroll past. You return to the research note. You submit it before 3 o'clock. Week 6, final entity sequence. 4 left to close. You run them in order, exactly as the protocol specifies. The last entity closes on a Thursday afternoon. You watch the status bar change to complete. You close the browser tab. The office closes on a Thursday. No ceremony, no final meeting. Everyone left at different times on different days. That was also planned. You take 1 briefcase. Everything else was removed in previous visits. Nothing is left that wasn't there when the lease started. You walk out into the city. Nobody stops you. Nobody is watching this particular exit. You knew that before you left. Nobody stops you. Nobody stops you. The protocol worked. The architecture held. The machine dissolved itself cleanly and left no wreckage anyone can find. Not yours. Somewhere on a trading floor in a city that never stops moving, a terminal blinks. A 23-year-old opens his terminal for the first time today. His badge says, Analyst, first year. He watches the numbers carefully. He thinks he is exceptionally good at this. He is right. That is the problem. He notices something, a volume pattern, a head of news, 3 separate tickers, the same signature. He circles it. He prints the chart. He thinks he is the first person on this floor to see it. He isn't. You were never the first either. Nobody on a floor like this has ever been the first. The first person always left before you arrived. A man walks past his desk. He stops for a moment. Not long enough that anyone would notice. Long enough. The analyst looks up. The man is already looking at what he was looking at. They both know what they're looking at now. He hands the analyst a card, just a number, no name, no title, nothing to Google, nothing to trace. He says, "Call it if you ever want to understand what you are actually seeing." Then he walks away. He doesn't look back. The analyst stares at the card. He thinks about it. He already knows he is going to call. He thinks the system rewards what you put in. He thinks the pattern he found means something specific about the companies involved. He doesn't know yet what the system actually rewards. He will find out. It takes about 4 months to begin finding out. The terminal blinks, the market opens, another step forward, exactly as it always